In this video, I am going to do the technical analysis of Dow Jones Industrial Average Index for the week commencing from August 23rd, 2021. This technical analysis will be in two parts. First, I will do the technical analysis on the weekly chart, and then I will do the technical analysis on the daily chart. This way, we will be able to get the most accurate technical analysis in this case. Should you wish to participate in my stock market programs, then I've given the links of these programs in the description of this video and also in the comment section. Now I'm going to start with the weekly analysis first. This is the weekly chart and these are the weekly candles. If you look into this, the last candle, it's a bearish candle and it was as expected. So last week I told you that market is about to fall, and once the market falls, then it will regain some of its bull momentum. So this is what exactly has happened in the last week, the week of August 16th. Now in this week, what we are seeing here is once again there is a clear bull trend. The candles that are formed here, they are on the bull side of the moving averages. But again, the problem remains same, and the problem is the critical resistance. This is very critical resistance, and it is 35,700. This is very critical resistance here. So market for like two consecutive times, market was a little shy to hit this resistance, this very critical resistance. So I told you that in Dow Jones plus minus 50, 100 it is acceptable. So it is at 35,700, and the market made a high of 35,631. But again, what we need to do is that we need to see like how the market is going to react initially on Monday and Tuesday, like whether it is going to hit this moving average or not. But again, you need to consider this fact here that whenever the market moves up, market will find this resistance. Market may hit this resistance, may break this resistance, but the market will fail to close above this resistance, this stiff resistance. And this will be the major sign here that now the market is going to that now the direction of the market is going to get reversed from bulls to bears, because for in last 8 or 9 months the market is continuously bull. It is continuously bull here. So we have a good support here, and this good support is at 34,500. As I told you last week also, that this is the 34,500, and then we have very critical support here. This is at 33,600 or 33,500. You can say to 33,500 to 33,600. This is a very critical support. But yes, this will act as very good support because of this confluence zone. If the market if there will be some signs on Monday that the market is trying to come it is trying to come down, in that case it may come down and it will find some good support here. But this 34,500, we have a support and we have a confluence zone, so it will find some good support here, and then from here it may try to bounce back, and if not, then it will further come down and it will hit these moving averages, and then it may try to bounce back, because the market never falls or never rises in a straight line. Now let's do the technical analysis here. So first, the moving averages, because the market is on the bull side of the moving averages, so there is clearly a bull movement through the moving the moving averages. So there is a clear bull movement here. Now if we talk about some other indicators here, then we have then we have a stock RSI. Stock RSI, the K channel of the stock RSI is more than 50, and also the D channel, which is indicating that yes, that there is still a bull movement left in here to the stock RSI, and that the stock RSI may further rise above 70 in the coming week if the market is if the index, Dow Jones Index, if it is able to sustain above means above this point, for example like 35,000 or 35,200, means if we consider this as a confluence zone, then above this point. Then we have the MACD. So MACD here is not supporting the stock RSI, and that's the problem, because in my previous videos also I've told you that MACD must support the stock RSI in order to get a clear direction here, or in any stock or in any analysis. MACD is not supporting the stock RSI, and MACD is partially bearish. So the coming week will be decisive. If the market comes down, in that case the MACD will be more negative, and means the MACD will be more bearish, and also the stock RSI will come into the bearish the direction. If we talk about the movement, no, there is not enough movement, means neither in the bulls direction nor in the bearish direction. So through all of the technical indicators here on the weekly chart, it is not clear whether the market is moving up or the market is moving down. So in order to see a clear picture, what we need to do here is that we need to look into like what is happening on the daily chart. Then only we can say, okay, that this is what is expected to happen. So now let's move on to the daily chart. We are now here on the daily chart. If you look here on the daily chart, okay, then this was the candle that was formed on 13th of August. Then on 16th of August there was this very heavy bullish hammer, so on this day it was expected that the next day the market will move up and the market will hit this resistance, but the market did not, because there was a very heavy gap down opening. And because of this gap down opening, and because of this the heavy resistance, like I told you, 50 points or 100 points or 150 points in the Dow Jones Index, it is acceptable here. So there was this very heavy gap down opening, and then the market came down, and then the other day, then further the market came down, then the other day market came down. But on this day the market formed this candle, which indicates that this kind of candle, it indicates that now the bearish movement is over, and now there is a bull movement is expected. Now, if we see that this is the last candle that was formed on Friday, on August 20th. So the closing of this candle is at 35,120, whereas the moving average is at 35,112. Means the closing is more than the moving average, which means the closing is above the moving average. So it is an indication that yes, that there are chances that if on Monday, remember, if on Monday there will be a gap up opening, in that case the market may move up. But if on Monday, if there will be any gap down opening, in that case the market will lose whatever it has gained here, and the market will come down. So market will for a moment it may try to hit this moving average, and then it will further come down. Then it will find the support here on this moving average, and then we have this moving average here, and then we have the good support here again as 34,500, 34,600, you can say. So this is what looks like, means through these candles, through the movement of this candle, this is what it looks like. Now if we do the technical analysis, then we have first we have the moving averages. Now here through the moving averages, because the market closed on the daily basis, the market closed above the moving averages on the bull side of the moving averages. So it looks like that the market is still in the bull trend. Okay, but the Monday will decide the fate of the market. And secondly, all of the moving averages, there is a very clear fan out. So moving averages in themselves, they are also supporting the bull trend. But if on Monday or Tuesday if the market falls, then there will be a crossover here. There will be a clear crossover here, and that will say, okay, that there is going to be a bearish movement. Now, if we talk about some other indicators, other technical indicators, then we have the stock RSI. Stock RSI is clearly negative. Stock RSI is clearly negative, and you can say that it is heavily negative. Means it is heavily bearish. Okay, because the K channel is less than the D channel, and the K channel is less than 10. K channel is less than 10, and also the D channel is about to hit the 10 or 15. And if we talk about the MACD, then MACD is also supporting this the bearish movement here, because MACD is also bearish here. So both the stock RSI and MACD are negative. Both the stock RSI and MACD are bearish. So they are supporting the bearish trend. And the momentum, yes, there is a very heavy momentum that is supporting this, the bearish the bearish movement. So through all of these technical indicators, considering all of the technical indicators, again here the moving averages, they are saying that the market is moving up, but the other indicators, stock RSI, MACD, and the momentum, they are saying that the market is coming down. So this thing, the fate of the market will be decided on Monday. We need to see like what happens on Monday, whether the closing will be above the moving averages. If the closing will be above the moving averages, then the chances are that the market may further move up. And if the closing will be below the moving averages, then for sure the market is expected to come down. Should you wish to participate in my stock market programs, then I have given the links of these programs in the description of this video and also in the comment section. Okay guys, so this was the technical analysis of Dow Jones Industrial Average Index for the week commencing from August 23rd, 2021.